Hi guys, and welcome to my journal for Monday the 21st of September. It was a broad-based sell-off in the markets today, and the market's heat map is just a sea of red. So equities were down, energy was down, gold was down, silver was down, bond yields were down, and many of the major currencies were also down against the US dollar. The euro was down, sterling was down, Australian dollar was down, Canadian dollar, I believe, was also down. And at the close, the ratio of the advancing to declining stocks on the New York Stock Exchange was 1-7. So for every stock that closed higher, 7 stocks closed lower. At the lows of the day, most of the equity indices were down about 2%. I think the Dow was down about 2.4%. But coming into the closing bell, there was some buying, and the Dow managed to claw back some of its losses. It clawed back about half of its losses. At the lows of the day, the Dow was down over 900 points, and it closed down 509. But the small cap index fared the worst. The Russell 2000 closed down over 3%. I think it closed down over 3.3%. The banks were particularly hit hard today, and the financial sector as a sector closed down 2.5%. But the banks, as a sub of the financial sector, the banks ETF, the KBE, was down about 4.5%. And this followed on from some negative news about money laundering at some major banks hitting the wires before the market opened. The weird thing is, this money laundering was meant to have happened about 10 to maybe 3 years ago. It's nothing new, but again, when markets want to go down, they go down, whether the news is good or bad. So this money laundering happened about 5-6 years ago. Anyway, all the sectors in the S&P 500 closed in the red, with the exception of the technology sector. This tech sector actually managed to close up about 0.75 of a percentage point. Every other sector was in the red. The VIX, on the other hand, was up today. The VIX closed at 27.78. And even though the VIX closed up, it was much higher intraday. At one point, it was above 30, so it gave back some, and that signifies some buying of downside protection today. So it was a sell-off. Even the safe haven assets went down, apart from the bonds. Yields came down, so money went into the bonds. So there was some downside protection buying, and the VIX went up to 27.78. The question is this the flush out of the markets that will see the market stabilize and go higher, or will the market continue to decline? Is this just one leg down and another leg down to come in? I suppose time will tell, but the S&P 500 appears to be at a key level that many market participants pay attention to. A key level they see as support. It is now down about 10% from its recent high, and the bargain hunters could come out in force and start bidding up the market from here. But time will tell, and that's why I trade spreads and not totally being directional. There are now 25 days until the October contract expires, and for the November contract, I am going to thread very carefully before putting on my November positions. Because normally with the US elections, there's usually volatility around the elections, and this year the volatility might be considerably higher But then we're still some weeks away from having to put on positions in November contracts. But I just thought to put it out there that November I am going to be conservative with putting on my positions. I think I might even go defensive on my underliers. So I'll be keen to put on something on maybe gold, silver, mainly maybe ETFs as opposed to single equities. But that when the time comes, I'll address it. Trade ideas, I had no new trade ideas today, and my window of opportunity for selling spreads in the October contract is now closed. That said, I have 3 open positions in the October contract, and they are in Alibaba, SE, and PDD. I'll go through them one by one. The first one is BABA, BABA. I sold the 260, 255 put spread. Where did BABA close today? And even with the market selling off, this thing still managed to close higher a bit, to close at 141. So it closed at 270, sorry, it was up 141, it closed at 273.82. I sold the 260 puts, the market is at 273, so my 260 short strike, short put, is out of the money and no action is required on that one at the moment. The second one is SE. On this one I sold the 125 120 put spread. Let's see where SE closed. SE closed at 150. This thing was up 3 today as the market tanked. Now my 125 short put is quite some distance in the money. I've got a comfortable buffer on this one. I sold the 125 put, it's sitting at 150. Hopefully this one should close soon. And the final one is PDD or PDD. On this one I sold the 75-70 put spread. Let's see where PDD closed. And this one is a lot closer than the other two. So still managed to close up 15 cents on the day the market went down. I sold the 70, I believe the 75 put. Yeah, I sold the 75 put. The market is a 79. My short strike is out of the money. It's yet to be tested, but it's much closer than the other two. So those are my open positions. And in terms of my watch list, I have got Tesla, I have got Amazon, Spotify, Zoom, CRBP, this one's coming back to haunt me, and PDD. So I'll go through them one by one. TSLA, Tesla. I believe Tesla closed up. Yep, Tesla closed up $7 today. IV is at 63.3, and that's why Tesla hit my radar today. The next one was Amazon and then Spotify. Amazon was up $5. Tech did get a bounce. IV 57.4. Spotify up $5. IV 55.2. Zoom ZM up $29 today. Wow. Up $29. IV 54.7. CRBP down 18 cents. IB 54.9, call it 55. The price is too low to do anything meaningful in this one. I think I'll kick this off my list. It won't be there anymore. And PDD. PDD was up 15 cents and IV is 51.2. So those are the items on my watch list, and that brings me to the end of this journal for Monday. The highlights of today's journal is my window of opportunity for selling spreads in the October contract is now closed. I'm going to thread carefully before I put on my November positions. They're more likely to be in defensive assets or ETFs over single stock options. And that's about it. Have a lovely day. Thank you. Goodbye.